Let's answer some questions from the last market outlook. I haven't read any of these, by the way. First one, have to say, absolute best prices for what you were offering. Even at these increased prices, this is a steal for what you were offering with the applied level. Okay, I was a little lost there for a second. I've seen a lot of content providers and paid thousands of dollars for subpar courses and subscriptions that didn't even offer a fraction. I normally don't do this. I'm just, okay, I get it. I'll pass on this one. It's not a question, and I try not to read things out like that. It sounds like I'm just self-promoting here. Sorry about that. Despite the potential political fallout, I have immense respect for Powell for defending the Fed's independence with a statement. Well, that is one thing I think you can say, if that is what he was doing there, is perhaps he felt the need to say it to reassure the market that he was there to protect the independence of the Fed, because without that independence, probably his job for the next 2 years might be a little bit difficult. So maybe he felt that, look, I'm not going to get renewed anyways. I don't want to get renewed anyways, but while I'm here, I'm going to do what I can. Yeah, okay. There's a hat tip in his direction. I really like these short market outlook videos. Okay. ASML stands out as a leading force in photolithography, excelling in both deep and extreme ultraviolet, with some design companies trading at exceptionally high multiples. Looking to gain broader exposure to the semiconductor industry with well-positioned SMEs. Notably, ASML has experienced significant price correction since June, despite consistently surpassing earnings targets. The company faced some unusual incidents, including releasing earnings early by mistake and a power outage today. These seem like external factors unrelated to its strong fundamentals. I'd love to hear your thoughts on ASML. I don't really invest in ASML. Let me just slide over here, and I do have its price up. Where is it? It's on this screen here. 667 as I speak. Yeah, that is a significant correction from, I think, well over 800. I think its guidance was weak the last time. I think if you look for puts, 45 to 60-day puts in the 500 range, I've done that before. But other than that, I'm not familiar with the financials of ASML to offer much. No mention of Tesla short. Any position I have is in the positions video in the applied level, which is updated every Friday. I'm trying to keep all my discussion of my positions there because, well, that's why I moved it there. If inflation begins to tick back up, do you see the Fed pausing in December? No, I don't. In their press conference, I got the feeling they were expecting that, just on base effects alone, that they were expecting that. So no, I don't think they'll pause in December. In your opinion, what would it take for them to pause? Probably if you had a couple of months of well above expectations, the month over month, not the year over year. The year over year is expected to increase because of the base effects, but the month over month, if you start seeing the month over month tick up 0.4, 0.5 for, let's say, 2, 3, 4 months in a row, I think they would probably want to pause. You seem fairly certain of a cut in December. Yep. Jerome is open about being data dependent. Yeah, it's what he always says. If you saw the market outlook, everything he said about inflation to me sounds like he's saying job done. And it says, he did say we are still very restrictive or too restrictive. So yeah, I think it's a done deal for a cut in December. I live in French territory, no exchange place, no government bond market. France has a distinct entity that operates as a central bank for French territories. The most The best benchmark for rates are those offered by commercial banks. Most sectors have a monopolistic market structure. Wouldn't a DCF be the more suitable valuation model to use given this environment? Well, I don't know. I don't know what type of company you're looking at. So I couldn't answer that. If you mean as a blanket statement, I don't know. Opportunity cost for the model would just be the rates on bank deposits and an equity risk premium based on judgment, perhaps. If you don't have a functioning bond market, the interbank market rates or swap rates, which is what a bank would post, swap rates are a good substitute. Comparables valuation approach is unsuitable since there's no market data and there's not many comparable companies anyways. Well, it doesn't have to be the same in the same country. It could be something comparable. There must be other companies in the world that are comparable. And I would look at not so much where they're located, but where their customers are located. So you can have a company on an island nation, let's say, and 100% of their revenues are derived from the U.S. market, and they do business in U.S. dollars. They are, you could say, de facto a U.S. company in everything but location. So I'm sure you could find some comparable, but I would look at their customer base and make a judgment call on that. Should be grateful to Powell. We at least have one Republican that is not a yes man. Yeah, if you pay attention to so far, a couple of appointees have been announced in terms of who's going to get what job, and they are described predominantly by one word: loyalist. I believe the condition for getting a job in the Trump administration is, number one, you swear an oath to Trump. Number two, you swear an oath to the Constitution. Trump before Constitution. While the U.S. is still a democracy, you put these loyalists in place that swear an allegiance to Trump before the Constitution. You basically have a dictatorship inside a democracy because no one will say no. It's the same as one person making all the decisions. You can circumvent the process by making sure that the loyalty to your leader is above the loyalty to the Constitution, which would be above the loyalty to the party, which would be above the loyalty to the country, I guess. Maybe the Constitution is further down, I don't know. But pay attention, everyone that's appointed, they'll be described as a loyalist. So Trump is slowly setting up a dictatorship inside that democracy. Your views on gold and Newmont. Do you think Newmont has bottomed? Newmont will be a function of the U.S. dollar. And if there's this belief, this growing belief that the U.S. will be the only economy in the world, and there's what Mohammed El-Arian says, this giant sucking sound from around the world as money flows into the U.S. because it's the only place to invest. And I don't know if you've noticed, but the equity market in the U.S. is all the good news will be flowing to the equity market in what you're predicting going forward. All the bad news will flow to the bond market. At least that's what the pricing is saying right now. Lots of money will come into the country, and there'll be tariffs, which will be revenue. Yay, equities, but inflation, boo bonds, but not boo equities, right? The U.S. dollar is increasing, and commodities denominated in U.S. dollars will decrease as a result. Newmont is an American company, so it gets no benefit from any change in the U.S. dollar. It basically is just seeing its revenues decrease. If it were in another country, then gold prices might be constant in the dollar or the currency in the country that it's in while the U.S. dollar strengthens. But for U.S.-based firms, as the U.S. dollar strengthens, especially in materials, U.S.-based firms would decrease in value. Would you roll forward a GM covered call that is underwater to avoid a cap gain? You've already answered your own question about what you want to do. You want to avoid a cap gain, and you're going to roll over a covered call. You're going to take a loss on that call. Your risk is that the underlying, well, I guess if it drops, you'd be okay on the covered call. But if it keeps going up, it would eventually be called away. But if you roll it forward, you'd pick up some premium. I guess if you're trying to avoid the cap gain, I guess you can do that. But I think in the asking of the question, you've sort of answered your own question about what you want to do. When trading, are you using desktop version of IBKR? Yeah. Or the iPad or iPhone? I use them all. Any particular preference or limitation? For simple things, the iPad or the iPhone are okay. If you want to do more complex things, I find the desktop version sort of the place you want to be. Took a small short position in the US Mexican rate. There doesn't seem to be any good choices for parking pesos. How would you conduct this carry trade without anything denominated in MXN? You have to have the ability to trade within the Mexican market. IBKR gives you that. You should be able to buy some money market securities. If not, IBKR does pay interest on your pesos. When the government spends beyond its budget, it needs to borrow money from someone rather than creating it out of thin air. If the government balances its budget, the money that would have been borrowed by the government will instead be borrowed by someone else who will spend it just as much but likely more efficiently. Alternatively, if it's not borrowed by someone else, the lender will spend it themselves, and again, more effectively than the government. It will shift money from one place to another, causing some discomfort, but even in the short term, it will be better for the economy and growth. You're making the assumption that the money that goes into it, that the money that would not go into a bond, would go somewhere else, which would then go somewhere else, which would then go somewhere else, which would then get spent. You're making the assumption that that's what would happen. No, that is not necessarily true. If I can't invest in one thing, I invest in another thing. Doesn't mean I spend my money. I could simply just be trading from one investor to another, and that money never leaves the banking system because it's excess savings, it's wealth. It simply just grows in a portfolio and grows larger. When the government borrows money, it intends to spend it, and it spends it with whomever. And then that money finds its way back into the banking system. So it does. I wouldn't say create more money, but it does create more reserves, which are then loanable funds, which then creates more money because of fractional reserve banking. So no, government spending is inflationary. If your argument were true, then no level of debt would ever be inflationary. No level of government spending, if they borrowed money, no level would ever be inflationary, because you would just be making the argument that, well, if they don't spend it, somebody else would have been left to spend it. That is a fallacy. That is simply not true. If the government borrowed $30 trillion and spent it, it would be massively inflationary. It wouldn't matter where it came from. It would be massively inflationary. All that $30 trillion that would have went into those bonds gets spent. But had they stayed in the bond market, they would have stayed in portfolios. They just would have stayed in portfolios. They wouldn't have been spent in that way. A lot of money that is borrowed by corporations, very little of it is actually new money. Most of it that is borrowed is meant to roll over other debt. So I am holding a bond from a company and it expires. That company will issue more debt to roll over that debt because it tries to keep a constant debt equity ratio, so that it keeps a constant weighted average cost of capital. So a lot of the debt that is issued on a regular basis by corporations is rollover debt. It doesn't release that money back into the economy. Same with U.S. Treasuries. A lot of what goes on with Treasuries is rollover. The extra that it sells to spend, it intends to actually spend that. Whereas if it didn't issue those bonds, it would have just been rolled over into something else. So it is extremely direct. If the government sells bonds in order to deficit spend, that money would not have been spent if they don't spend it. Walk us through how you think about margin for options positions. I don't know how whatever I'm told is the margin is the margin. I don't think about it. Required margin is much lower than margin needed in stress scenario. Would it be better to set aside a larger amount up front? The margin doesn't change with the level of volatility. The margin changes as the underlying price versus the strike price changes. So if you have volatility that spikes, but the underlying doesn't move a single penny, your margin does not increase at all. For example, naked call with 10 premium and say 30 margin requirement. However, let's say in worst case you expect the underlying goes up and your new margin at that point might be 50. At the same time, the option is recording, say, a 20 mark-to-market loss. I'm not following this so far. So overall, all you're saying is that the underlying is going up. That's what's making your margin requirement increase. As the underlying drops, your margin requirement drops. As the underlying increases, your margin requirement increases. That is standard. I don't know about this 30 plus 20, 30 minus 20 plus 50 thing you're doing here. I'm not following your example with the numbers, but all you're pointing out is if the underlying moves against you, your margin requirement increases. Yeah. What's the point for a company to do stock buybacks? It is a way to return money to shareholders without issuing a dividend. It lowers the share count. It increases the earnings per share. It sometimes nullifies the effect of stock-based compensation. So if you have stock-based compensation in which you have to issue shares to employees, buying back the equal amount of shares doesn't dilute current shareholders. GM has had just a crazy few days post-election. True. When I entered, I had a price target. Keep in mind now about GM in the S&P 500. It was the lowest valued stock in the S&P 500. There was nothing cheaper than GM. If you are bullish on Tesla, you must be bullish on GM. You must be. GM is more profitable than Tesla, more profitable per car than Tesla, and they have a union. They have an EV division that's growing faster than when Tesla first started. And let's keep in mind, Tesla was was unprofitable until just a few years ago, 3-4 years ago. Was unprofitable until then. 12 years unprofitable. GM will be profitable faster in less than half the time. GM is selling more EVs at this stage of their EV life than Tesla ever sold. GM already has a robotaxi. And it's trading at 5.6 times forward earnings. I think you can give it a 20 multiple based on that. It should be a $200 stock. So GM was cheap. I don't know that I would be lightening up on GM just because it's hitting 52-week highs. It's still super, super cheap. And if the EV mandate is killed, ICE will be with us for a very long time. Again, the ICE age is far from over. This will only help GM. GM is 3 times the size of Tesla. 3 times the size, and with a much faster EV division than Tesla had, and moving to profitability a lot faster than Tesla did, and their cost per kilowatt hour on their battery pack dropping faster than Tesla's. In many ways, it is a better car company than Tesla. In many ways, it's a better car company. If Tesla is worth over $1 trillion, GM should be worth at least 150, 200 billion, at least, instead of just 55, 60 billion. So, $100 price target, $200 price target, GM would still be an inexpensive car company versus what Tesla has. It would still be inexpensive. Right now, GM is ridiculously cheap for the level of free cash flow that it offers. Ridiculously cheap. So, no, I don't know that I would be too eager to jump off. However, I will say this. For some reason, the market gives GM no respect for actual results, but gives Tesla a whole bunch of respect for fantasy results, results that will happen just around the corner. It's just around the corner. Everything is just around the corner. It's just around the corner. And, okay, here's $1 trillion. Whereas GM every quarter says, this we have done. Look at the cash flow and we're buying back shares. And the market says, nope, not you. Don't know why. I don't know why it doesn't get the respect it deserves. I don't know why. If I were a wokist, I would say it's because they have a female CEO. But I know it's not that. I don't know why they're not getting the respect they deserve. Some basic understanding of the fundamentals of the world of finance and investing. How would you recommend someone approaches going through the applied series? There is no order for the applied series. It is wherever you want to go. I've been asked this, I don't know how many times, but I guess there's this, you go through school, you go through CFA, you're so used to a pathway through. You start at chapter 1, you end at chapter 10. That when you have something that has no pathway, think of it like a newspaper. Just flip around till you see a story that's interesting. That's the best way. You don't read a newspaper from the first story to the last, because there's a whole bunch of sections where you might say, I don't care about lifestyle. I don't care about the opinions. I mean, I care about the politics section and the business section. That's it. Read it like you would a newspaper. Let your eyes scan, and you see a story that you like, you read it. Same thing. That's how I would do it. If you expect long-term rates to come down, wouldn't it benefit small caps more? On the interest payment debt, as you mentioned, small caps are heavier in debt. In that case, why short IWM as a hedge? Small cap performance after the election is much better than big cap. Does that change your view? No, not with IWM. The S&P 600, I'm not shorting that. But IWM, I am shorting that. The one of two things are wrong right now. So we can think of, you can do a grid, and you can say long duration, short duration, long beta, short beta. And right now, beta is working out and duration is not. We're sort of over here, which doesn't make any sense. How can the bond market get all the bad news and the equity market get all the good news? If you are short duration because you think the long end of the curve is going up, you should be over here. You must be short beta, right? You must be. That would be a consistent trade if you believe that. If you are long duration because you think the long end of the curve will go down, then you would be long beta. So what am I doing? I am down here. Why am I down here? I am long duration and I am short beta. I'm long duration because I think that the Fed will have no choice but to lower rates, because I think we have a deflationary background. That is not good. That is not good for revenues if you have deflation, because you have to keep lowering your prices. I don't think in an advanced Western economy like the US that you're going to get Argentina-style inflation because you have Argentina-style leadership. You can go ahead and put tariffs on things. Any tariff will be inflationary once and only once. But the primary impetus right now is on pricing is downward. And if you have the long end of the curve increasing, you will crush the consumer far faster than you'll crush anything else, because all mortgages are tied to the 10-year, all car loans are tied to the 5-year. So my thinking is that this, whatever is going to happen, is going to force the Fed to lower rates. The Fed will have no choice, especially if debt continues to climb. The Fed will have no choice but to make the interest cost cheaper for the government. Will have no choice. And if you follow the logic, or at least the logic that I'm working with, follow it through, deflation leads to lower corporate margins, not higher corporate margins. So I am short beta on that respect. Now, if you had a market that was trading at a more realistic multiple, I would be up here. I'd be up here. I'd be long duration and long beta. But given the elevated multiple that we have right now, given the level of rates and the long end of the curve going up, I think the long end of the curve is overdone, and I also think the multiple on the market is overdone. So that is why I'm down here. Besides, I do expect, when I say that I expect the rates to come down, here we are, let's go out 12 months, and I think that I'll be right. I don't know what the pathway is, but we have a market that is elevated that I think is probably way overdone. And how we get to this point, duration may perform, and then it may underperform, and then it may perform, may underperform, and however you get there. The path, haven't got a clue. Haven't got a clue. What's going to happen tomorrow? Haven't got a clue. Haven't got a clue. But it's the destination that I think is more important. What's the basis for ample reserves being 2.5? The last time, in 2019, September 2019, the last time they caused trouble in the repo market, they were just under 2 trillion. I think about 1.8 trillion on reserves. So given 6 years later, 5-6 years later, and the increase in the money supply, I'm just saying 2.5. Let's give them a higher number than 1.8. 1.8 caused trouble, and they immediately worked to increase it. So I'm just targeting 2.5. I don't know if it's 2.5. Could be 2.7. Could be 2.3. I don't know. Any fundamental reason for FCX's performance? Why basic materials are being sold off? Because the dollar is going up. That's all. Financial modeling, will you ultimately come to a valuation of the company in terms of fair value and share price? Yeah. Valuation would be the next step. But if you've gone through what we've gone through so far, you'll recognize that we made a lot of assumptions. And when you value the company, you're going to make a lot more assumptions. So that whatever price you come up with, you say, well, this is fair value. You could say, the process that we went through helps us arrive at what we would think is a fair value based on the process, if all those assumptions work out, and if all those assumptions are correct. They never are. So just keep in mind that when you come up with a number, it's a ballpark. It's just a ballpark number. It's meant to make you feel good about something, but it's no more precise than your guess about the future. And the market doesn't, the market will do what the market will do. If we did a forecast for Costco using 2023 data, went out 5 years, did a discounted cash flow, we would come up with a price that was well below where it is right now. You can come up with all the price targets you want. The market will do what the market will do. So you sort of have to keep thinking about the story and how much, you can't just, the discounted cash flow to me seems troublesome because there's not much you can do other than just say, well, I guess there'll be more cash. The market thinks there'll be even more cash coming through. Well, that means your assumptions are too low, or some assumption is wrong. Whereas if you do a comparables, with the comparables, you can at least say, well, my multiple may be wrong, or my number, or the metric I'm using may be wrong. as opposed to saying which of the many assumptions over the next 5 years are wrong. That you can have, it does give for a multiple expansion, right? So we'll do discounted cash flow, but I'll tell you, it really is just, all of that is built on a mountain of assumptions and guesses. So it's just, sometimes you could just say, well, look, why don't we just increase the price by 12% every year, and that's my best guess. And you'd probably be just as close as everyone else who does discounted cash flow. But yeah, we can do that. Can we interpret this course on how to build an equity report? I don't know that I would say that. There is a much more rigorous process within an institution for building an equity report. It is the basis for building an equity report, sure, but I don't know that I'm going to do that. Would tax cuts not raise tax revenues in absolute terms? I've heard that tax revenues would drop relative to GDP, but not in absolute terms. So what you're suggesting is that if you get tax cuts, you could boost GDP such that the lower tax rate times the higher GDP means more tax dollars on an absolute basis than the higher tax rate at the lower GDP. That's possible, sure. You'd have to have some really significant growth to get that done. But yeah, I can see that is possible, especially if you are on the disadvantageous side of tax collection. So if we think about total revenue, and you think about the tax rate, as you start implementing a tax rate, you increase revenue up to a certain point. Actually, total revenue here and tax rate here. And as you keep increasing the tax rate, total revenue starts to decrease because money and capital leave, because it's too punishing. That if you lower the tax rate, you'd easily increase tax revenue. So if you think that you're on this part of the curve, then yeah, it stands to reason that lowering the tax rate would raise tax revenues. Yeah. This could definitely be taken out of context. 1422, I don't know what that is, and used poorly or subjectively by the media. Well, first of all, that's just a true statement. Almost everything will be taken out of context and used poorly or subjectively by the media. Fox will pick up what they want to pick up on and use it for their purpose to promote their ideology and tell you the other side is wrong. And CNN and MSNBC will then take the same conversation or the same speech, but take different statements from it to make the other side look bad. That is just, your first sentence has just described mainstream media, in one sentence. That is mainstream media. No matter what you say, one side will take it the wrong way unless you're on their side. As you often say, it might take on a life of its own. Powell didn't say anything controversial. No, he didn't say anything controversial. But it's Trump. You're challenging. You're basically openly saying that he cannot do something. Trump can do anything. He's God. In his mind, he's God and he can do anything. And you publicly said that he cannot do something. That's disloyal, number one. You need to be punished. And number two, you think I can't do something? Let me show you how good I am, how wonderful I am. No one's ever seen anything like this before. Everyone's talking about it. Okay, it's because it's Trump. It's not because of what he said was untrue or controversial. It's because it's Trump. Let's not forget who he is. He's a small, petty man who needs his name on everything, and no one should question what he's doing, ever. his one thing, loyal to him. You must be openly loyal to him. And Powell was not with that statement. I don't think it was controversial. Just he shouldn't have said it because it's Trump. If it were anybody else, it's a true statement that anybody would listen and go, oh yeah, okay, so what? If it were anybody else, the question wouldn't have even been asked that needed that answer. But it's Trump. Imagine the head of U.S. Central Bank. Okay, I think we got that. Yeah. I appreciate your point about the debt, but I also think it's important to note the difference between marketable and non-marketable government debt. That's been pointed out before. So what you have, just so that everyone's clear about non-marketable debt, Social Security will have within it an IOU from the Treasury saying, so the Treasury will say, well, we'll take this cash you have here and we'll leave an IOU. It's not a bond because it's non-marketable, which means it's nothing more than an IOU. The Treasury still has to give it back. I mean, they still have to give it back because Social Security is an entitlement, which means you got to pay it out. It's not a discretionary budget item. You got to pay it out. So if you took the money out and it comes time to pay a bunch of people their money, you got to put it back. The government has got to put it back. So that IOU by the Treasury has got to be paid back, has got to be put back because Social Security belongs to the people, not the government. It belongs to the beneficiaries, not the government. So the non-marketable debt still must be paid back. It doesn't get to be canceled. It must be paid back. So no, I don't think that you can make a distinction on that one. A large portion of U.S. government debt does not trade and is not subject to supply-demand dynamics of tradable debt. Wouldn't matter. Non-marketable debt seems more like a ledger entry thing, and there is less worry about whether the market can absorb it. Well, if you're talking about too much debt in the marketplace, I guess maybe you can sort of make that distinction that if the Treasury just took all of Social Security's money and never put bonds in the market. Well, no, I don't know that I would. Actually, I don't know that I would say that because this money that was sitting in Social Security could have went out and bought other bonds. So by the Treasury taking this money, it's not buying other bonds. You've just increased the de facto supply that is available in the market because that money is no longer holding onto those bonds. Those bonds are now available in the market altogether. So on a displacement basis, it does displace other forms of marketable debt that could have been taken off the market that are now left on the market. So the supply of those corporate bonds or whatever it is have now increased by being the money disappearing into the Treasury. Why did you short Tesla? Well, again, if you want any commentary on my positions, any positions, it's in the applied level. TLT has an average maturity 25.5 years, effective duration of 17. Yep. Why the price change from cuts on the short side? Price doesn't change from cuts on the short side. Price only changes when the long end of the curve changes. The belief is that as you get lower short-term rates, you get lower long-term rates, and the empirical data does prove that out. You do get lower long-term rates. It may not be one for one, it may not be today, but you do get lower long-term rates. So that if you have a curve, let's say there's your money market rates, you have an inverted curve, and you bring money market rates here, you may have an upward sloping curve, but you will get lower capital market rates. Empirically, that always happens. That always happens. 100%. That as you get lower short-term rates, now as you're lowering rates, you may get to here and the curve may do this, and then it may, the long end of the curve has volatility. It will steepen and flatten, but it will walk itself down over time with the short rates. What is the ratio you're referring to SPX? I don't know that I was looking at a ratio. Is it market value to operating income? or market value to net. Well, it's whatever the index is, so it has a price, call it 6,000, and then you divide it by the forward operating earnings, the forward 12-month operating earnings. Let's say it's 260. That's all it is. Yeah, do you agree that whenever anybody says, do you agree, it means I already know what you think. Do you agree? The market value to operating income is erroneous as the numerator is related to equity holders, whereas the denominator covers both equity and debt. It doesn't matter. If you have a broken scale, it doesn't matter. All scales are broken, by the way. All scales, when it comes to economics, all scales are broken to some degree. What matters is the scale is broken in the same way every time you measure something. So it's the best measurement you have going forward. It's the best measurement you have. So it removes the impact of the capital structure or capital structure decisions. It also removes the impact of taxes as well, because they're more idiosyncratic, right? Whereas everything up to operating earnings can be related to economic growth. Below that, you get, the level of debt you have is not related to economic growth. It's related to capital structure decisions you've made. Your tax rate, as well, is related to sometimes the types of levels of revenue that you have. How much is unearned versus earned revenue. The IRS doesn't recognize unearned revenue. You receive money, it's income, but not for accounting purposes. So it removes idiosyncratic events that have nothing to do with the market. So you can say, well, it's a broken scale. It doesn't matter. If you get on the same broken scale, it will tell you over time if you're gaining weight or losing weight with very good accuracy. Even if it doesn't tell you what your real weight is, it will still tell you that you're gaining or losing. That's all that matters. I haven't and don't share your optimism about the long end of the curve. Okay. Historical big treasury buyers are not buying anymore. What I don't get is why the ongoing bear steepen or barely affects market multiples. Well, one of those markets are wrong. Right, like I said earlier, it seems to be right now that the bond market is getting all the bad news that's going to happen seems to belong to the bond market, and all the good news that's going to happen seems to belong to the equity market, and that's just not true. One of those two things are wrong. Either the bond market has it right and the equity market is way overdone, or the equity market has it right and the bond market is way overdone. I don't know which one. My thinking is that the equity market is wrong, is completely wrong. And I think that the bond market, well, I shouldn't say completely wrong. I'd say the equity market has to take some of the bad news coming up. It can't have nothing but the good news and the bond market have nothing but the bad news. I think the equity market has to take some of the bad news coming up, and the bond market has to get some of the good news. So I think they're both overdone. Meaning short beta, long duration, to me still seems like the logical trade. Now, when I say short beta, I do have a short beta position on small caps, but I am net long overall. I am net long. That if you look at my net beta, I am net long. Let's see. Why do we need a Federal Reserve for an entity with such great power and control? That better be a dang compelling reason, and I haven't heard one. Let's say that things go really, really bad and you have no central bank. Who's going to step in? I can compare it to your bank versus Bitcoin. And with blockchain, what do you need a bank for? Better be a damn good compelling reason. Money disappears out of my account. What the hell am I going to do? I call the bank. I say I didn't do that. They put the money back. Money disappears out of my wallet. Oh, I can't call anyone. I'm just screwed. So when things go bad, you're just screwed. You're just screwed. So when everything fell apart in 2007, you had a central bank that stepped in and flooded the market with liquidity because credit dried up everywhere. That would have been a really, really ugly outcome for everybody for a long period of time. And that's where the central bank stepped in. It would be like me saying, you know what? I have never once had a fire in my house. What the hell do we need a fire department for? Better be a dang good reason why we need one, because it costs a lot of money. You know how much firefighters make in Canada? Well over 100,000. 120, 130, 140,000 a year for a firefighter. I've never once called them. I've never once needed them. But what happens if I do? Right? What happens if I do? That some things are there for the emergencies, and you got to pay for them in good times because they are certainly worth it in the emergency. There's your central bank. Applied series, you mentioned that if there's a sell-off in stocks, money tends to run to treasuries, pretty much, which should push the price of TLT higher. If there's a rapid correction, couldn't the combination of margin calls and overall panic push TLT's price down in the short term? Margin calls are really a thing for hedge funds and retail traders. The vast majority of money is not margined. The vast majority of money out there is not margined. That's only the retail trader, and that's only a fraction of the retail traders, just a fraction of the retail traders. The hedge funds that use leverage, it depends on the strategy that they're using. But as far as your typical ETF, your typical growth fund, value fund, no leverage there. Why does NEE have such low free cash flow? Typical for a utility company. Well, it pays out a lot in dividends, and you really don't want it to build up cash. What's the point of cash? It can't earn a return on cash because it's not a regulatory asset. You always want the utility to increase its assets as much as the commission or the regulator will allow it to increase its assets. There's no point in having cash build up. The tomorrow's cash flow, tomorrow's return, is based on today's assets. So the higher you can get your regulatory assets, the greater the size of the cash flow, or the dividends. The faster the dividends will grow in the future. We now have calls to end the Fed, which folks can take seriously as they want to. However, would you consider it prudent to at least ponder such a scenario? No. I think that would get a lot of pushback even within the party. It would be, I don't know that you would get 100% of Republicans on board. I don't even think you'd get 50% of Republicans on board, so I don't see that as much of an issue at all. Do you gather the 52, 36, 13-week implied volatility percentile for TNT, TLT, and SPY from IBKR? I do. And as I'm sitting here, I can see I just got a notice. Oxy Petroleum reports $1 earnings per share. They were expected to report 74 cents, so $1. We'll see after I finish this video how well they're doing. I'm convinced the $600 Canadian I spent on the applied level back in June will be okay. What are your thoughts on the idea floating around that suggests Trump will try to already talked about that. Is it fair to predict a market pullback correction in the short term? Is it fair, or do you mean is it justified? Yeah, I think so. I think it was a lot of overreaction, and since the election, every single day up. It doesn't seem to have an end. But Tuesday, as I do this, it's Tuesday. Sorry about the noise going on around me, but I got all these devices. We did have a bit of a pullback. An in-depth take in MicroStrategy. You can't ignore it any longer. It is just ridiculous. The debt, all the debt now is convertible. So the price of Bitcoin is above the conversion price. Actually, it's not even the price of Bitcoin. The price of MicroStrategy stock is above the conversion price of all the convertibles. So you have to adjust the share count for the number of shares that are going to be created because of this. There is no leverage. I don't know how stupid a group of people can be. I just simply don't know how stupid they can be. But MicroStrategy is a good example of how a group of people can be absolutely stupid, and how maybe the bigger money is in taking money from these stupid people. I don't know. It doesn't make any sense when you can create your own leverage. You can buy a Bitcoin for the price of Bitcoin and create your own leverage. There is no leverage with MicroStrategy. I personally don't get it. Topic of Republicans becoming deficit hawks. My thought is that whoever is not in power tends to do that an awful lot. Yeah, and then switches their position once it's their turn. We'll have to see if they keep that narrative moving forward. Most Republican politicians know that Trump rules the party, and they'll struggle to get reelected without his endorsement. So my thought is that we won't have as much trouble getting his policies through as he did before. Yeah, all good points. Can you do a video speaking at length about your thoughts on the economic impact of Trump's tariffs? That will be this Friday in the positions video. I will show you how to think about tariffs using both complexity theory and game theory, because you cannot just use linear thinking like the market is doing right now. There's always trade-offs and there's always strategic response, and you have to game those out. Stock-based compensation schedule, debt schedule, or schedule for share dilution for MicroStrategy. Yeah, I think that would be pretty straightforward. Everything, all those bonds right now would convert. So it's just a matter of figuring out the conversion price of each bond and the float size of each bond. And, if each bond, let's say, converts to 8 shares, because it was like $130, $140 a share at the time, and it was 2 billion, and 8 is for every 1,000. I mean, it doesn't take much to do the math to figure out what the dilution would be, and then you could figure out based on that, look at the market value of the Bitcoin holdings divided by the fully diluted count, and you'll get how much every shareholder is paying for Bitcoin. I think with the diluted count, you'd be somewhere around $200,000 to $220,000 per Bitcoin, if not higher, and you can buy it for 80. Talk about stupid. It's like selling a $20 bill for $60 and people lining up to give you $60 for your $20 bill. Cap rate will be timely. New plan for applied level. Please make new plan. New plan for the applied level. Clear the recurring fee and validity things. In the live Q&A. I don't understand that at all. There's just a lot going on in there. Please make a new plan for the applied level. I don't know what that means. Clear the recurring fee. Well, if you have the applied level now, there is no recurring fee. So I don't know why it would matter. I don't know what validity things in the live Q&A are, though. More broadly, I think Trump's leadership skills are terrible. And I don't like the way he bullies people to escape accountability for his job performance. I definitely don't like the way his brainless followers laugh and support it. His loyalists get power. That's what they want more than anything. And right now, you got a bunch of ass kissers lining up in Florida to drop to their knees, kiss the ring, kiss the ass, whatever the case is, and please, please, please give me something of power. That is power, right? It is. It's everybody wants it, and people are showing themselves willing to say and do anything to get that power. Okay, you sound very angry. I rarely am. How are your short positions going, the ones you got into on election night? Um, I put all my positions and all the discussion of my positions in the positions video in the applied level. But I see where you're going with this. Um, Word of advice, if you're ever in a professional setting, never, ever, ever bring up trades that move against somebody. That's bad form, sunshine. You'll be put in your place very quickly. Everybody has positions that move against them. Even you. Even you. You're not above it all, okay? This is bad form. You just end up coming across like an asshole. Costco released their monthly sales report. How would we incorporate the data into our model, if at all? On a monthly, I don't know that I would incorporate it into the model unless you are keeping a cumulative tally from let's say beginning of the fiscal year to now versus fiscal year last year to now. So September over September, you can have a look. And if your forecast in growth is about the same as the growth, that's okay. I would caution about responding too much to very short-term data like monthly sales, because weather can sometimes disrupt the pattern of sales, right? And then you end up chasing randomness in the data. So I'd be a little careful about high-speed data like that. Powell's a bit unwise politically. He should have voluntarily resigned before the rate cut. What? Rate cut was a bad idea. I'm not following that. All these reasoning skills and you still can't reason with social media. I have no idea what that means. Trump should get lower interest rates over the next year, not because he wants them down, but because his policies might hinder growth, which is being fueled by public spending, and push the Fed to cut rates, especially in a low tax, low regulation setting that is supportive to innovation. See, I think that's what people are missing, is the other side of the argument, is that if you unleash entrepreneurship and you unleash innovation, those things are deflationary. The economy doesn't necessarily have to be inflationary because you do these things. This is linear thinking. In a complex system, you have to think of strategic responses and you have to think of trade-offs. So much thinking today in markets is so linear. Well, if this happens, then this happens, and this happens. It's a straight causal effect. You have to think about it as if this happens, then you could have a bunch of trade-offs that happen, which then cause other things to happen at the same time, which then cause some trade-offs here and some other things. And here you might get some strategic response that send you back the other way. It is never just A causes B causes C and up we go. There's always pathways, and sometimes they go backwards, sometimes they go forwards. There's always trade-offs involved. Where are we here? I don't know. I know you don't like Trump very much. Let's separate the character from the policies, right? Let's put it in two columns. And there are some policies I agree with, some I don't agree with. I just don't agree with the character of the man. That's all. But I can separate the character from the policy, much like I can separate an artist from their output, much like I can separate the private life of a politician from the public life of a politician. It's the left that really have a hard time separating that. I don't like the character, hence I don't like the policies. I can separate that. Love to see you do an analysis on Truth Social's future. That would be an interesting one. I think that anybody who is interested in knowing what Trump says the moment he thinks it would have to follow on Truth Social. And I think that is probably the main reason why you'd get any increase in membership on that platform. Other than that, it just sounds like Truth Social. It just sounds so something I don't want to be part of. You know what I mean? It just sounds so, I don't know, right-wing redneck conspiratorial. it just doesn't have the right sound. Like, choose some other words, call it something neutral. But Truth Social is so loaded that I would feel icky, I guess is the technical term I would use, actually using it. I have no desire. I'd like to. I mean, I have an account on X. If he was on X, I'd follow what he has to say. But I have no desire to sign up for Truth Social to hear what he wants to say, just because I don't know that I'd sleep well at night knowing that my name was associated with Truth Social in any way. It's just not my thing. Took Facebook over half a decade to have its first positive cash flow, and Twitter also a very long struggle. It would be interesting how you get a rough evaluation on this. But Facebook is a neutral name. Twitter is a neutral name. Truth Social is so, again, it's so loaded that it appeals to a certain type of mindset who thinks that everything is one big conspiracy and this is the truth, man. Like, yeah, it wouldn't be my thing at all. What are your thoughts on gaps specific to TA? Do most gaps get filled? Well, I can answer that in terms of what technical analysis says. Technical analysis says that all gaps do get filled, but it doesn't have much to say about when they get filled. It's not as if they immediately get filled before anything. So if you have a chart that's doing this and it gaps up, it doesn't say this has to be filled before it pushes higher. I mean, it could push higher for years and years until it gets filled, and you say, "Aha! See, all gaps get filled." Is sort of the point that TA is getting at, is that all gaps do get filled. So as the stock was coming down, a technical analyst would say, "Well, there's a gap down here," so that might be a target in terms of where the price would go before it might find support. If there's a downside gap, the TA technical analyst might point to the downside gap. Nothing else matters other than lines on charts, right? If you have a chart and you can draw some lines, that must be your forecast of the future. I think it's ridiculous, but are these things genuine attractor points? No. Or does the market participants believe in TA? Basically, it becomes a self-fulfilling prophecy. Let's say that there's a gap at $50 and it gapped up to 52, and the stock for years has risen and now it's 312. I don't know that any technical analyst would say, there's a 50, there's a gap, we got to cover the 50 first, and that would be shorting the stock at that point. I think other technical indicators would have shown up on the way and this gap would have been long forgotten. But if it starts drifting down, right, it may get to a point where, okay, it has support. If it breaks through support over here, it might point out we have a downside gap over here. It would then be brought in at that point in time. But I don't know that any technical analyst would cling to that gap in the face of years of rising stock prices and say, but we have a downside gap that needs to be filled. I don't know that would ever happen. And that's it for this week. Nice short week.